Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this lesson I'm going to show you a Master Trader buy setup that we talked about last week and gave our subscribers, but I'm going to be focusing on objective trade management once you are in a position. This was a trade we gave our subscribers in the advisory swing and options trade letter. We give stock and option trades, long and short. We trade everything there. This is a buy setup. Professional gap up, retraced in a controlled manner, reversed on minor support, and I have a bullish engulfing at the 20-period moving average. Look at this beautiful, what we call igniting volume. So very bullish setup. Here's where we gave it to our subscribers. After this bar made the setup even more confident, this is what we call a correction bar. It opened, well, it actually gapped down a little bit, took out the prior bar's low, snapped right back with a range expansion, closing breakout. So we're going to buy over the high of this bar, stop under the low,
Alex, I must have misinterpreted
as a Master Trader buy setup. This is a fantastic slide. I really urge you to print and keep it close to your trading station. These are the general rules of how to objectively, which means existing in fact. I'm going to show you bar by bar analysis. I'm going to show you how to trail these pivots. So here's our little buy setup.
It should start to fall, our little
controlled retracement reversal. Buy over the high, stop under the low. Here are the rules.
And
initial stop there.
It ran to get
Only trail bar by bar if it accelerates higher. In this example, it did. I'm going to show you. So we're going to sell half under a prior bar's low. If we're not near our target and we have a bigger potential gain based on the setup and multiple time frame analysis,
so we're
going to have to let it retrace against us and pivot. A pivot is when we have a pivot low is we have three higher low bars to the left and right. The computer spits them out for us. You'll see on the chart. Let it pivot, and then you move your stop for the back half under the pivot. And then we're just going to trail pivot lows until it accelerates further near our second target. One's just rough rule of thumb, when we're 80% of the way to the target or prices accelerate like it did in this little stick figure, then it's okay to switch to the bar by bar trail. Here we go. I want you to ask on every one of these slides. I'm going to go bar by bar. Ask yourself objectively. We all have the emotional desire to see an unrealized gain and want to take the money. That's human nature. This objective approach we're showing you is going to allow you to get bigger gains unemotionally. Ask yourself, what does the current candle tell us about the trade working as intended, beautiful buy setup and reversal and support, and your own trade management rules for position management, which should be the entry your trading plan. So this first bar here, this first bar, so this one, we have the trade triggered, we have a higher low, higher high bar, and it's into the price void, which is insignificant resistance. It has room to move higher. We are feeling totally fine. What are we thinking about this next bar? Well, I'm thinking fantastic. It's the same as the prior bar, but it's even bigger. It's more bullish, and I'm not near my target. So I'm feeling fantastic.
No way.
What about the next bar? It accelerated higher, and now I have slowing momentum. So we're going to set it closed below the opening, which is why there's a red candlestick there. So based on the rules I just went over with you, we're going to sell half under a prior bar's low. This one actually gapped under the prior bar's low. We would sell half under a 5-minute low, which probably didn't trigger here, but I don't want to get too detailed into this. It closed strong, so we're still very bullish. This is bullish price action. Now I'd be out of half, and based on this making a lower high, lower low bar, but closing bullish again. Once it trades over the high of this bar, then that's going to be my new stop. Now these blue and red dots here are my pivot lows. So this pivot low, even though there's a blue mark here, it's because I have the other candlesticks hidden right now for the purpose of this lesson. We would not know this until we have 3 higher low bars to the right. Now I have a beautiful higher high, higher low bar, closing breakout. That is my new stop. Here's the next bar. Higher high, higher low. Looks fantastic. This trade is working as intended. Now it's trading under a prior bar's low. Momentum slowed. Didn't make a big new high. So I'm putting here, it's a choice. Do you want to take the money now? Objectively, there's nothing wrong with that. Traded under prior bar's low. We held through one pivot. Or let's say the weekly chart looks fantastic, the market looks great, and you think this has a bigger target, then there's nothing wrong with continuing to let it retrace as we did over here. Let it make an anticipatory higher pivot low, and then you would continue to move your stop under those higher pivot lows until, as I said in the summary chart, it gets closer to your target or it accelerates higher. I hope that helped, folks. I gave you so much valuable information in a quick amount of time. That was a great lesson. Go to mastertrader.com/education. Under the strategies education, my partner Greg Capper's course, Swing Trading Strategies, is the most phenomenal course to teach you objective price analysis, to interpret candlesticks of anything that moves on any time frame. And he also has an advanced money management course which gets into this in great detail. Do yourself a favor, check it out. As always, email Greg or me with any questions. Good trading. Look forward to seeing you in the next trade review video.